Today, I'd like to wish everyone happy holidays, have a good Thanksgiving with your family, and I hope that you have a good rest of the year. Today, I want to take a little step back, for the holiday, and I want to talk about the difference between being a trader and being an investor and how market sentiment drives short-term moves in the market that may or may not be connected to what people are actually talking about and doing. So this is China's exports and who actually gets the exports. And as you can see, we're, I guess, the biggest over the EU. But when you go through the whole world, we're about 16.1% of China's exports. Certainly not the dominant force. So this is what we're going to be concentrating on today is Trump coming in and how the world has reacted to Trump and what they believe or don't believe that he's going to do. But first, before we go through what the two countries are actually saying, I want to remind everybody that market sentiment changes all the time. I mean, remember when we were going to cut 50 basis points 3 times in a row and, all this other stuff. It's us trying to ascertain what the future is, okay? And so we take what people are saying as a long-term strategy and saying that it has short-term implications, okay? So, as you know, we had the Trump trade when Trump got elected, and dollar went up, bonds went down, the interest rate went up, and the EM currencies got hit, so forth and so on. There was a trade there, and trillions of dollars were made and lost on those trades. Then we named Bessent as our Treasury Secretary, and all those trades reversed themselves to the tune of trillions of dollars. But what I'd like you to do is, here's a question that was asked to Bessent about tariffs, and I would ask you to stop and read this. I mean, it's exact quote, so he's just speaking, so there's a lot of triple and double I's and all this other stuff. But basically, what he says is, look, they're over-manufacturing. This is on the last paragraph. They're over-manufacturing and under-consuming. And this is going to be a 10-year project to get them to not over-manufacture and to up their consuming, okay? And he goes on through this article saying that imposing these tariffs is really to get to the point where we have no tariffs. So tariffs are a hammer to a problem, okay? Now in the China Daily, they talk about this themselves, right? So they bring in this guy, Xu Min, and he's the deputy director of the International Monetary Fund. You can stop and read all this, and I'd suggest that you do, or you can go to the China Daily, and I believe we have access, everyone has access to it. So, Trump came out and he says here, he mentioned that Canada and Mexico will be 25% and China will be 10%. But we all know that Trump ran to become president on 60%. And it's interesting here that he says, look, to me, economically, 60% is not a real tariff. It is simply a way to force China to decouple from the U.S. or to push the U.S. to decouple from China. So in other words, if you put on such a high tariff, it's not about trade. It's about you want to cut off the relationship. This is what he says. And actually, I think there's a lot of truth to that. But when you divide up these two blocks like this and the capital flows and everything, there's almost zero benefit for either side. Now you can see here in the article here, he says, look, if China can increase the share of consumption in GDP from 48% to 58% over the next 10 years, okay? That would be a significant achievement. The American consumer is 70% of our GDP. They're 48. And that difference is what we're talking about. Now, should we be 70? Should we be less? That's another argument, okay? So the Chinese are focused on income growth in China because that leads to consumption, and consumption leads to a higher percent, and that's what they're actually looking for. So, what does this mean to us? Between the trader and the investor. Well, this is the way I look at it. You have the two people making decisions for the two big countries that we have a 10-year project in front of us. So Bessent's coming in the power in less than, let's say, 45 days. He's talking 10 years, all right? Even though he may only be there a year, 2 years, 4 years, I don't know. No one knows. But basically, he's talking 10 years. You go to the Chinese, they know they have to raise consumption. They're talking 10 years. 10 years is not a time horizon that anybody that is trading looks at. And JP Morgan this week came out and said, hey, look, the average retail investor is up 3.7% year to date, even though the market's up 25%. And in fact is we've been in single digits, I think it says here, for 4 years. We hadn't seen a double-digit return since 2015. So why the discrepancy? Now, I know there's going to be people who are up, 500%, 600%. I own NVIDIA, I own whatever it is, Strategic Micro, whatever the hell that is. But really, what we're talking about here is that the markets are making really big moves based on assumptions that the market sentiment is making. And these are very short-term moves. I mean, just look at the dollar index and the bond index over the last 3 weeks. It's, these are big moves. These are not small moves, okay? And when you look and see what the countries are actually saying, the guys on the ground who are going to make the decision, they have a 10-year time horizon. Yet we're doing daily trading. So what I would say to you is when you're going to go into the market, you have to make up your mind what you're going to do, okay? Are you going to be an investor or are you going to be a trader? Doesn't bother me. There are highly successful traders in this world, highly successful, okay? And there's highly successful investors. To me, Warren Buffett is an investor. You look at a hedge fund that trades their position 50 times a day, they're a trader. Traders, to me, tend to do technical analysis and follow the charts, and you see it all over. It's all over my feed. That's what everyone looks at. Look, candlesticks, all this other stuff. For me, that has very little import, okay? What I look at is from the investor point of view. What are we trying to do here, okay? And who's trying to accomplish it? And do they have the wherewithal? They have the population, the technology, the supply chain. Do all these things add up so they can do what they want to do? And then you make a intermediate to long-term commitment to understanding your narrative on whether it's going to work or not. All right? So you can bifurcate your portfolio. You can say, I'm investing with this money, and I'm trading with this money, because they are two totally different functions, trading and investing. They're not the same. So what we have to do is first make up your mind what you're going to do, how much capital you're going to allocate to investing, and how much capital you're going to allocate to trading. And then follow the different rules of engagement for both of those trading strategies. It's entirely up to you. I would say both seem to be the way to go, but that's entirely up to you. So, like and follow, and definitely tell me your comments. And thank you for listening.